Cashflow Diary Podcast, episode 132.
Welcome to yet another exciting episode of the Cashflow Diary Podcast, the podcast that teaches you insider tips, tactics, and strategies for creating leverage streams of cash flow into your life. Learn from top-performing entrepreneurs, business owners, investors, and thought leaders from across the globe as they share their secrets to success. Like what you learn on this and other Cashflow Diary podcast episodes? Go to learninvestingnow.com and sign up to receive powerful tips and information that will help you succeed as an entrepreneur and investor. Now, here's your host, investor, entrepreneur, business owner, educator, speaker, author, and master facilitator of Robert Kiyosaki's cash flow game, Jay Massey.
All right, and welcome to another episode of the Cashflow Diary Podcast. I am your host, Jay Massey, and you know what? I am glad that you are here because one of the things that you have learned over the times that we have been talking together is that cash flow can be generated in so many different ways. And one of the unique things is that today's guest does it in a completely different fashion than we have never talked about, and I am over the moon and excited about that. See, today's guest is Andy Tanner. You probably know him as one of the Rich Dad advisors. You probably know him as the author of 401 Chaos. You may even know his book, Stock Market Cash Flow. However, have you ever considered that stocks could produce cash flow and, most importantly, paper assets? I mean, when the market volatilities and everything else that goes on today, how on earth is one to make sense of the chaos that's out there in the marketplace? And here's what I'm excited about. When you meet individuals like Andy Tanner, you realize that at the end of the day, he's just down to earth, awesome fellow. He and I hung out on the cruise with the real estate guys, and that's where I've learned something unique about Andy. Not only is he one of the few Rich Dad advisors that's taller than me, he also can play the drums. So I just gave you something right there that you did not know. Help me welcome Mr. Andy Tanner. Hey, Andy, how you doing?
Well, I don't know if we play the drums, Jay. We pound on them and make noise. Whether we could qualify as being a musician, that's.
Well, all I know is I saw you go back there play. I was just like, wow, okay, he does it all.
Oh, geez, they're so much fun. That was such a great trip. I mean, what an amazing faculty and amazing guys. So much to learn from everybody and a great time.
Indeed. Now, one of the things that I like to do, I look at today's entrepreneurs, and for me, today's entrepreneurs are a lot like yesterday's superheroes. Superman, Batman, Wonder Woman, Ghost Rider, whoever your superhero of choice is, that's what I look at. But every one of those superheroes, they started out as quote unquote normal people. They had a normal story. Something happened. Maybe they got bit by a spider. Their planet blew up, and now they're, super. So the question is, before you were, putting on your tights and flying around in capes and saving people from their own stock market woes, who is Andy Tanner?
Boy, that's a great question. I went to college to play basketball on a basketball scholarship, and I couldn't jump and I couldn't shoot, but I could foul. So they put me on the team, and that's really all I wanted to do, Jay, was play hoops. I had no career goals or anything like that. And when I finished that chapter in my life, like a lot of people, you're wondering, what are you going to do when you grow up? And I always loved public speaking. And so I became a public speaker, and I would, be often even a pitch man, at a trade show or a seminar. And I would sell everything from e-commerce to, all kinds of things. Well, I was approached by a company, and they had software. This was, right after Al Gore had invented the internet for us, and they had some software, and they said, "Hey, this software helps people trade stocks online." I said, "Well, I don't know anything about this." They say, "Well, you're a pretty good speaker. You could probably fake it." I said, "No, I really can't. I don't know anything about it." They said, "Hey, seriously, try our software out. We'll get you some education. We have some workshops you can attend. If you like it, you can help us represent our software." So that's how I first got exposed to learning how this stuff worked. Is I actually was going to give a speech on it, and I had to prepare for it. and I just found an interest in it. I think it's a really fun way to learn about investing, because what a lot of people don't know is it's so much different than just buying a mutual fund or being in a 401k. And it really spills over into all the other areas of investing that a person does, learning to read charts and things like that. It's helpful. So that's how it began. Not quite any gamma rays from Bruce Banner or anything like that. But it was because I've always enjoyed being a teacher, and as I would be given different topics to teach as a communicator, this happened to be one that stuck to me, and so over the years, I've just learned to get better and better at it, and I'm always still a student as well. I'm still learning, but I've gotten better every single year I've done it. That's for sure.
That, first of all, is awesome. I love the fact that, it's good to know that to become awesome, we don't need to be bit by a spider or any gamma rays. However, there's got to be that point at which you start this way. You weren't intending on it. This is interesting. I like it already. Often we find our destiny on the road trying to avoid it or just not looking for it. And you end up speaking on this topic. How did that first one go?
It was interesting. I went to a workshop and took a 3-day class, like many people do, on investing in stocks. And sure enough, 2 weeks later, I was there on stage, and I started out saying, I just told them the truth. I says, most of you have probably done this longer than I have. I just opened up my American Trade account a week ago, but I'm sure going to share with you what I'm learned. And if you like it, you can do it too. And that was pretty much it. But it was fascinating because the internet, in every business, whether it be e-commerce, whether it be real estate, whether it be commodities or in paper assets, the ability to get information now is unprecedented. We should, Arthur Levitt, former chairman of the SEC, once said this. He said, "We should be the most informed generation of investors in the history of our capital markets. The ease of today's technology is not an excuse to do less. It's an opportunity and a mandate for us to do more." And I agree with that statement. So that's really what brought it about, and that's how we started. And as one of the greatest ways to learn something is to teach. You mentioned that we've got a couple books. You've got a book. I'll bet you've noticed this, Jay. If you want to learn something, don't read a book on it. Write one. Wouldn't you say?
Oh my God.
It's worth writing a book. It's worth writing a book just because of what you learned personally. If anyone buys it, who cares? I learned more about retirement and 401ks in the research and organizing my thoughts and experiences on my books than I would have ever reading a book. And in that an irony, if you want to learn something, teach it. Right. If you don't go as a student, go as a teacher. If you want to learn a topic, don't read the book on it, write the book on it. People don't interview Jay Massey because he read a book on real estate. They interview him because he wrote one, and entrepreneurship and everything else. Isn't that interesting?
That is indeed. And I guess the other thing that was interesting to me while we're talking about the book process is just the idea that I didn't think I had anything to put enough to fill up a book, and then it started going, and then it just wouldn't stop.
Yep.
And then it's become this whole other animal. Now, interestingly though, there was, because this point happens, I think, for most people. You're doing your thing, you're talking, but there's got to be a point at which you switch. You say, you know what? I want to build my own something.
Yeah.
And where did you summon that courage to make that happen? Because I know there's a number of people who are feeling in themselves that, I'm better off, or I think I'll be better off doing my own thing, but I got to pay the bills, but I got to do this. And I would love to hear how you extricated yourself from that mindset, and then was willing to go out there and start saving other people.
Well, I think, like so many people, the book Rich Dad, Poor Dad had the big impact on my wife and I. The idea, we never had seen a cash flow quadrant before. We'd never really known there was this other world. I mean, just like everyone else, go to school, get a job, off you go. And I don't know that I summoned the courage. I mean, I had a lot of failures, Jay. I started several e-commerce businesses that would go for a while and start to look like they'd make it, and then they'd just get smashed. I'd make mistakes. And so I don't know that there was really one point where I just kept swinging at it, and I still continue to swing at it today. I mean, I don't know where I'll be in 10 years or 20 years, but that's the spirit. And I think that's what Robert would say, and I think I agree with him, is there's a spirit inside of you that wants to do, wants to buy assets, wants to lift and give more value to more people than just one at your job.
Agreed 100%. Now, but one of the things that you said, which I think stops a lot of people, and this is why I said courage, is that you said you tried e-commerce and you said you had a lot of failures. So you had to come up with a reason to not quit. I mean, often those are reasons that are offered to people. We're all offered reasons to quit and excuses why it won't work. But yet you and your wife made a choice to continue. And that's what I want to understand.
Yeah, I see what you're saying. I think that for me, it's very, very basic. I never had any grandiose ideas of I want to conquer the world or, be the next Bill Gates. But I have two wonderful children, a great wife, and the idea of being free to do what I want, when I want, with who I want has always been something I've wanted to pursue and then preserve. And so that's really, I'm a bit of a family guy, I guess you'd say, and old fashioned that way. But I love the idea of being able to do the small things. My sons, I coach their AAU team at, 3:00 every day, and I'm the only dad there because the other guys aren't able to pull away. And so it's for me, it's just family. That's the thing that really drives me, is the freedom to do things with my family and provide a better life with them. And it's very simple, but yet it's powerful for me anyway.
No, I agree with you. Again, I can still remember there was a time where one of my oldest daughter, who is now in college. Oh my God. Anyway, my oldest daughter who one day got sick at school, and they called me, you got to come pick her up. And I'm like, okay, I'll go pick her up. But when I told the people I was working for at the time that I had to go pick her up, they gave me this look like, where are you going? I'm like, my daughter's sick. Like, I had to really justify that I needed to leave to pick up my kid from school. And it was just like a stressful situation. I'm just like, I do not. It was things like that motivated me to no end, to figure it out and fail forward, fail fast, and fail frequently. So speaking of failure, I'm going to take a stab and say that there's at least one person listening who's tried this whole paper asset thing and failed at least once, myself included. Okay? So when it comes to thinking about paper assets, you get this immediate I don't want to talk about that. However, there is something that I know that hanging around you, I've learned that's been very, very helpful, is understanding things like the difference between fundamental versus technical analysis. So from the standpoint of someone who's getting started, thinking about, okay, well, maybe stocks is the way that I could do it, what would you say is the first thing that they need to think about?
Well, I think you hit it on the head, is education. I muse often at the world of investing, because a lot of people that try paper assets do it with no education whatsoever. They'll throw money in their mutual fund. They'll try it just no different than if you went to Vegas and just started playing some games.
But Andy, you just said that we're the most informed nation ever. We should have this. What's the problem?
Well, I think he said we should be, and I think the data is. I think the data is certainly there. But my mentor Robert Kiyosaki often says this: is that information doesn't really do much good if it has no meaning. For example, if I said, Jay, let's take a moment and let's exploit time decay in the options market with an inverted diagonalized iron condor, checking to make sure that we avoid volatility crushes and get our Greeks right. That doesn't mean anything to someone. Information without
Andy?
Yeah, exactly.
I'm going to go with that. Probably didn't mean anything to most people listening right now.
And it's a little bit of a crazy example because it doesn't have meaning. And so it sounds intimidating. It sounds scary. So what Robert often says, he says, look, education is what takes being informed and gives it meaning and makes it easy to see. Hey, you can do the same thing with real estate. You can begin talking about 1031 exchanges and people check out because they think, well, 1031 exchange, that sounds difficult. Awfully simple if you know what it is, simply awful if you don't. So to begin, you say, well, did I try investing from the standpoint of going to school first, or did I try to perform the open heart surgery first? And I think that's where a lot of people will find that at least that's been the case in my life and many that I've seen, is the failure came because we started doing something before we learned about it. And folks will go to a real estate seminar and they'll learn about real estate first. And then they'll go out and find success because they've gotten the education. But can you imagine, Jay, can you imagine what it'd be like to go into real estate investing with no education and no mentorship and no coaching, just going out and starting to buy stuff? I mean, you'd have no idea. You'd be shooting in the dark in so many ways. Well, and that's exactly what people do in paper often in 401ks. And what you'll find is the philosophies between paper, business, and real estate, the generalized principles are often the same. They're often identical, and you can apply them across the board.
Yeah. And just so you know, Andy, for the individuals who go out there with no education for real estate and started, I call them sellers. That's who I call them. I call them sellers.
Motivated
sellers, right? And so that's typically how that works. Now, would you say then that the reason this occurs, here's my supposition, is that it's so much easier. The pain or the ease of entry is so much, the barriers are like virtually none. I mean, you could probably open an account on your iPhone today and be trading within minutes of, us talking right now. So wouldn't you say that has a lot to do with the reason that more people have probably had that, we'll call that negative or not so positive experience first?
I think you've really got a great insight there. To take a bunch of loaded guns and pass them out to preschool children and say, give it a shot, is probably not the wise thing. And yet it's just power. A firearm can protect you. A firearm is a soldier's best friend. It's how you win. If you're going to go into financial battle, don't bring a knife to a gunfight, right? Use powerful tools. And I think that's right. The ease of access, and also, Jay, the culture of it is, investing is something that my broker handles. Investing is something the guys on Wall Street do for me. And I disagree with that. I think it's a life skill. I think it's like learning to drive a car. It's like learning to tie your shoes and brush your teeth. You don't hire those things out. You learn those things. And I think those two things, the ease of access, number one, opening an account on an iPhone, but also the culture of, well, this is not something I'm in charge of. This is something human resource or my 401k guys, they're in charge of this, not me. And I think those two things get people into trouble.
Well, and I know from my time having been a financial planner, yes, guys, I was there. All right. There was also this disconnection from the funds in the sense, especially the money that was in a 401k or IRA or any sort of other qualified account. It's like, that money really doesn't exist because it's not until I'm, 59 and a half or what have you before it matters.
Yeah, it's like the stuff in your storage unit, right? It's there, and you feel you could get it, but maybe not. It's out of sight and out of mind, and it really makes Wall Street rich. That attitude makes Wall Street rich because they're collecting fees on that stuff and expense ratios on that. They'd love to have it no other way. Is just have, imagine a business, Jay, where people handed over a portion of their paycheck every single week, no matter what. And you got to take fees off that. I mean, it's a beautiful business for Wall Street. Very unfortunate for the investor, I think. And so that's why we're an advocate of education and taking a greater active role in those decisions, becoming a more active investor rather than just out of sight, out of mind.
Agreed. And that's one of the foundational things that I love about you. I love about everything Rich Dad, that again, I think we've all had this transformational experience. For me, while it wasn't the book Rich Dad Poor Dad, it was Cashflow Quadrant that just like, oh my God, are you kidding me? But here's the question. There are probably someone right now who's listening going, okay, then that's my secret, is that I really need some more knowledge. When they've already had 2,000 hours of listening, training, and all this other stuff, and books and CDs and videos, and they're going, okay, that's what I need to do. At what point, though, because you're going to make mistakes. I think mistakes are part of it. I think our school system does us a disservice by not teaching us how to fail properly so that we avoid it. But at what point do we pull the trigger?
Well, one of the advantages we have with paper is that, and this is really unique to the asset class, is I can trade on paper. I can create virtual accounts where I have real market movement, real trades, real stocks with fake money. And if a person, hops in without taking advantage, it's like the game Cashflow. It's a simulation. It's a simulation. If you can't win the game Cashflow, you're probably not ready to buy something in real life, right? If you can't buy a fictitious house and understand how the balance sheet and the income statement relate to one another, probably not ready for the real thing. Well, just as you said, you can open up an account on your iPhone for real. You can open up virtual accounts. And until a person has traded successfully virtually and been able to handle losses and been able to handle adjustments when the market moves, it's probably not time to dip your toe in the water. But once you do feel some confidence, another advantage we have in paper is something called scale, meaning that I can start with such a small position size that I can learn whether or not I can do it. Trading 1,000 shares and trading 100 shares, there's really not that much difference mechanically, technically, research-wise, right? It's just not that much different. I can go out and buy Coca-Cola stock. Warren Buffett has billions of shares, but the Coke stock is going to move the same for both of us. So my counsel to people is practice on paper. Get a paper account if you want to fool with this and get your education. And then when you decide to jump in, let's not put in 6 figures. Let's buy a few shares of stock and begin scaling in like you would anything else in life. You mentioned that I'm an attempted drummer. and I got my first drum set when I was 8 years old. It was an old secondhand. My father found it at a garage sale. We didn't have much money, and he gave it to me for Christmas. He bought it at a garage sale. It was a Christmas present. And someone said, well, Andy, when did you realize you could play the drums? Well, the fact of the matter is there wasn't one day, Jay, where I woke up and said, well, yesterday I couldn't play today. It was a very gradual process where things became recognizable. And now I know there's a lot better drummers in the world than I am, but I can generally go up on stage with some guys and keep a beat and not ruin it too bad anymore. And so when did that day come? Well, it was a gradual process. And I think it's the same for the real estate investing. I think it's the same for the business and paper. I don't think there's a day where you just hop in. I think it's a very gradual process.
Yeah, that there's a process of incremental investment.
There's a gradient.
Whether it is cash or time, because in the case of learning to play the drums, it's definitely a time investment. I went through something similar with photography, and you trust me, you don't start out with the cameras I have today. That's a bad move. You start out with the smaller cameras with less buttons and less features, and then you work your way up over time until you can do it. Now, you used a word though, when you're mentioning this process that I just want to make sure that we all have a same clear definition on. When you say traded, because you said you can start a trade and begin to execute very small. When you say trade, I'm thinking, all right, that's a capital gain event. I bought something low, I sold it high. That's it. That's not cash flow, Andy. Help me understand.
Well, one of the things I do is I have some real estate, and I trade with those people. I give them time in the home, and they give me money. That's a trade. That's an exchange. We have something called the Chicago Board of Trade. We have people that regulate trade. We have international trade. So every single time we make a transaction, there's something that's been exchanged. So to me, trade is just another word for I'm making exchange. For example, we have the New York Stock Exchange, the Chicago Board of Options Exchange. So when I collect that rent, which to me is cash flow, that's simply an exchange. They're exchanging money, and I'm giving them some time in my house, which is a wonderful way to begin a discussion on how cash flow is drawn from paper assets. It's very much the same thing. Absolutely. In fact, the way Warren Buffett gets money from paper is not too far off from the way Donald Trump gets money from rent.
Got it.
Really interesting stuff. So that's a great definition. What does it mean to, some people might conjure up images of day trading. No, we don't day trade. We don't sit and buy, sell all day long. That's a job.
Well, I mean, if you stay up too late one night, you might see an advertisement for something like that and think that's what you're talking about. So, then let's just be very basic.
Yeah.
How does one generate cash flow using paper assets or any order or some sort of stock that they're looking at, right now on TV?
Are you tired of letting good cash flow generating ideas go to waste? Go to CashFlowDiary.com/ready to apply for a complimentary, yes, that means free, one-on-one breakthrough session. Take action now. Go to CashFlowDiary.com/ready. Again, that's CashFlowDiary.com/ready. Before we get back to today's episode of the Cashflow Diary podcast, your host, Jay Massey, has some important insights to share with you.
All right. So we're a few days into the new year, and I just got questions for you. Have you quit on that resolution already? I don't know. One of the things that I want to make sure that we always keep in mind is that making a resolution is one thing. Keeping it is a completely different thing. And just keep this thought in your head. If we just did 10% of what we said we would do, I think we would all be completely fine in so many different ways. Various levels of discipline is what it's going to take for you to build your cash flow, become the bigger, better, badder investor that I know that you're looking to become. And that's why you listen. And I'm just dropping one small little hint and into that regard. And as you've listened in this particular episode, you probably have picked up a few others of disciplines that you're going to need in order to become the person you're looking to become. Anyway, let's get you back to some of those tips and techniques.
Well, let's look at two different basic things. The first thing you can do is let's talk about a dividend. Okay, now that's not generally the way I do it. Just like you use fancier buttons on your camera than I do, I use fancier stock market buttons. But if you want to start out basic, let's say you own some Verizon wireless stock. Now the stock price could go up and down and up and down and up and down, but they're going to give you a portion of the profits, the actual earnings from the company, right?
Hey, Andy, let's use T-Mobile since I one T-Mobile, of their cell phone towers. Okay. They're renting a cell phone tower for me. It just feels wrong to talk about. It just feels wrong to talk about it. Yes.
So if you have and I don't know if T-Mobile pays a dividend. I'd have to look. I imagine they do, but let's say that the real estate you own can go up and down in value, right? It's going to vacillate in value, and yet you'll have consistent income from the rent. What we hope is fairly consistent income. Well, a dividend would be the same. We can buy a stock, own the stock, watch the stock go up and down, just like we could buy a house and watch the property value go up and down. But every quarter, we're going to get some money. We're going to get a dividend. Now, the challenge with that is with real estate is making it lucrative, making it a high return instead of a low return. But that's a basic example we separate in our mind as money that is not coming from a move in the stock, but money that really is coming from the movement of time. Every quarter, every month you get a check. Every quarter you get a dividend, and you're making money as time goes by, irregardless of where the asset price goes. Well, let's go up a level now. Let's add some fancier buttons to our camera, if you will. One of the things that people like Warren Buffett, and I laugh at this. I don't want to digress too far, Jay, but I laugh at this because there's circles I get into where people just, paper, it's not something I can hold in my hand, and it's not like gold and I can touch the real estate. That's foolishness. If I own some stock in Apple, I can go to their building, I can see their products, I can watch their manufacturers, I can see their workers. Apple stock is every bit as real as a piece of real estate ever was. And if you have a piece of real estate, you have a deed, a piece of paper that proves that proves you own that. It was funny. I was talking with some gold guys, and he says, "You really need to buy gold." I said, "Well, where should I store it?" He goes, "Store it in my vault." I said, "Well, how do I know it's mine?" He says, "Well, I'll give you a receipt." I go, "What's the receipt printed on?" He goes, "Paper." Right. And so really all a paper asset is it's a claim, just like a deed, just like any, certificate says you got gold in the vault. It just says, look, I own some of this company. Does that make sense, Jay?
Yes, I think I can hear paradigm shifts going across the world right now.
Yeah. I mean, awesome. It's funny because we live in a culture where there's a lot of talk about meltdown and Armageddon and everything. And if I buy a coffee bean farm in Brazil, now I have this hard asset. If the world goes to heck in a handbasket and all I have is my guns to defend myself, I go to Brazil, I say, yeah, but I'm an American. This really is mine. When it comes down to it, there has to be a certain amount of civility that we depend on. And it seems that we always revert back to that. You have Weimar republics and you have chaos and you have Russia and things that go on. But we always seem to come back to saying, okay, let's be civil. Let's make some agreements. And we sign things on paper. We sign constitutions on pieces of paper. We have deeds and wills and trusts, and all of these things are on pieces of paper. And so the other part of that is, I think about this. Where does George Soros have his wealth? And where does Warren Buffett have his wealth? And where do the richest guys in the universe, if you could have Warren Buffett come to an event or a cruise or something, it'd be interesting to learn from the guy who's absolutely the richest, the smartest, the top of the food chain. And where has he gone? Paper. That's where he's gone. And so what we do is we say, well, how does Warren Buffett do it? How does he really do it? Does Warren Buffett have a 401k? No, he doesn't. He doesn't have one. What Warren Buffett does is, and I'm going to use a fancy word here, is Warren Buffett sells derivatives. And it's the same thing I'm doing, for example, on oil right now. Right. Is I'm selling derivatives. And what a derivative is it's simply a contract. And that's what you're in the business of. If you own a house, if you own a house and you have a rental contract, that is a derivative. And you're selling a rental contract. You're literally having them sign a piece of paper that's good, that expires. Maybe it's a month-to-month contract. And you say, look, I'm going to make you a promise that you can stay in my house for a month. And when this contract or this derivative expires, we're going to have to do a new one. And so one of the things we can do that's fun, Jay, is we learn about the derivatives in the paper assets markets, which are often called options and futures, and we learn to sell those for time decay. And that's my primary source. When I make money and cash flow from the stock market, it's not because I'm buying a stock and having it go up or down. It's generally because I'm selling someone an option, and they're paying me for that option until it expires, and then they have to buy another one from me if they want to do it again. Same thing as rent. I have an expiration date on it, and just as a rental contract has an expiration date on it. And so to me, it's very much seamless. I look at my renters, and the rent is due on the 1st, and that holds you till the 30th. And on the 30th, that contract is no longer valid for that month. You've got to send me another rent check on the 1st. And the same thing happens with paper, and literally on a monthly basis. The only difference is, in paper assets, it's generally the 3rd Friday of the month is expiration, and the next Monday's payday. So it is a little heady for people to get their head around, but there's some reasons to learn it, Jay. I mean, if, for example, let's say you were born without a personality.
That could be a
You know,
problem.
if you're born without a personality, paper assets can be wonderful because you never have to talk to another human being. If
Andy,
you're
Andy, I got to stop you right there. It is so hilarious. Guys, if you go back, there are a number of episodes ago where I simply said the difference between a paper asset investor and a real estate person is interpersonal skills. That's it.
it could be. I mean, how does a guy like Mitt Romney make $200 million? You're born without a personality.
There it is.
You know what?
There it is. Now it's all true.
He went paper assets, man.
That might have just solved some problems for some people. They're like, well, maybe that's what I should do.
Well, when you think about it, if you don't want to, when I love to sell, I love being in business and I love to sell. And so I have no problems with negotiation and sales, but other people don't like that feeling of having to, haggle over an offer or make a counter. Some people don't even like the feeling of submitting an offer that's low. They feel weird about it. But in the stock market, you push a button. It's a perfectly, it's a very, very, it's a perfect market. You want to sell something, click a button and it's sold. You want to buy something, click a button and you buy. There's no advertising. There's no haggling. You can simply just run it from your computer. So there are some things that are nice about that. I personally love sales. And I think it's a mistake, Jay, to often what's funny is I was on a panel once where where it was like everyone you had a gold guy and you had a real estate guy, you had a business guy, you had a commodities, an oil guy, you had a stock guy like me. And everyone was supposed to fight about which asset class was the best. And I think, that's like the dumbest thing in the world. To take one of, it's like saying, which one of my children do I like the best? I think that the wise investor understands that there's some really good real estate deals out there, and there's some really crummy ones that can kill you. And the difference is education. I think there's some great oil plays out there, and I think there's some crummy ones that can kill you, and the difference is education. I think there's some great stock plays out there right now, and I think there's some bad ones that can kill you. But the difference is every investment, I think we need to look at as an individual investment, because I enjoy business. I enjoy real estate. I have a tremendous interest in oil right now, especially considering where it is technically.
Right.
And I have an interest in paper. Why can't I have all of these? Why do I have to choose? And wouldn't I want multiple streams of income? And wouldn't it make me feel more safe and secure to know that if my business income dropped, I can ramp up stock income? But if my real estate income dropped, I could ramp up business income or oil income. So to say one is good and one is bad, I think that's really unwise, because there's opportunity everywhere, and you cast a wider net, you can get more fish, in my opinion.
Agreed. And you're bringing up an interesting point that actually one of our Cashflow Diary community members sent in a question specifically for you, wanting to know that Michelle simply is asking. She said she would be interested in getting your opinion on what you think are important economic risks that we need to be concerned about and how we could mitigate them. Now, obviously, in the way she wrote the question, she was like, well, besides real estate, what else can I do?
That's a great question, and it's one we could do many, many shows on, because there's so many. I think, first of all, there's a couple of different risks, Michelle, and everyone else that you can learn about. I talk a little bit about this in my book, 401 Chaos, and a lot about it in my stock market cash flow book. There's many different types of economic risks. There's interest rate risk. There's geographic risk. There's oranges freeze in Florida, because of the geography. There's risk, legislative risk. They change the laws and things happen. But I like to talk, Jay, about two broad ideas. The first type of risk would be what's called systemic, and the second type would be non-systemic. And let's get a little detailed and talk about both. Let's say that British Petroleum, their initials are BP, which stands for broken pipe, not British Petroleum. And British Petroleum breaks a pipe in the Gulf, and their stock price falls from $60 to $30 in a month. that'd be what's called a non-systemic risk, Jay, because it's really just about BP. It's, Apple's still selling computers, Amazon's still selling books, everyone else is going along their merry way. Pfizer's still selling pharmaceuticals. That's a non-systemic risk. It was a screw up by one company. So that's a non-systemic. Michelle, an economic risk is more of a systemic risk. That's when the whole real estate market collapses because of a subprime meltdown. That's when the entire stock market collapses because of a dot-com bubble. And so there's a lot of these to look for. For example, we have a long-term fiscal risk that is systemic, meaning that in the United States, our fiscal path is unsustainable. And we're having to use monetary policy to make up for that, which is a big problem. So the fiscal risks are difficult. We have fiscal risks around the world in Japan, for example, Russia, Europe. And so I look at these fiscal risks as huge economic factors. Another one, Jay, that's interesting is, policy and demographics will give you the future. Here's another risk to the stock market, quite frankly. If you have 79 million baby boomers that have to withdraw their money at the same time at 70 and a half, and they have to get on a distribution schedule, that's a lot of money being pulled from equities at the same time. Who's going to buy all that stock? So that creates huge opportunities for the savvy investor. George Soros has made a ton of money on learning how to make money when things go down, as has Warren Buffett. And so, I think these are some of the risks that are out there. I think there's fiscal risks. I think there's demographic risks and policy risks. And we could go on and on. So here's a better question, though. How do I manage them? Not what are they, because there's not only risks we can label like non-systemic risk and systemic risk, but what about the risks you and I can't see coming? The 9/11 that no one saw coming, right? What about the risks? How do you protect yourself against that? With paper, you do it the same way you do it with real estate. You do it with paper. You do it with an insurance contract. If your rental property burns down, we could talk about how many different ways that can happen. Kid playing with matches, solar flare, lightning, forest fire. You could talk, guy falls asleep in bed smoking. You can try to talk about all the infinite ways the home could burn down, or you just buy insurance and you say, look, if it burns down, I'll get a check. Well, that's a big difference in paper, Jay. Think about this. Which is more likely to burn down in the next 6 months, your home or your 401k? Which one is more likely to burn down, your home or your 401k? Well, which one did you buy insurance on? And so one of the things that Soros and Buffett and professional investors do is we buy insurance to help offset risk for these things that Michelle are talking about. And they're absolutely insurable. If you were to look at the amount of they're called put contracts is what they're called, right, on oil right now, they're through the roof because professional investors are buying insurance to protect themselves against a drop in the price of oil right now. And so it's a fascinating thing to learn about. And actually with the right teacher, it can be made simple. And that's really where we've developed our education business, is the ability to make things fun and simple to where we can break it down in language that anyone can understand.
And the more that you talk, because self-admittedly, I am not as well versed in the paper asset world simply because it's not been my world. However, I can see the similarities. In the same way that you make the incremental investment with, a skill set, drumming, a hobby, you make that incremental investment with paper assets, you make that incremental investment with real estate, and you definitely make it every time you put an ad out there for your business. You are making incremental investments, and those principles are the same throughout.
Exactly.
And that's kind of one of the things that I like, is that it doesn't really matter where you start. It's just that you've got to learn the principles somewhere. So, with all this being said, though, what you're really saying is just because there is a risk, that's not a reason to not move forward.
Boy, I think I can't imagine life without risk. My wife took a huge risk 21 years ago, and she hasn't learned what an exit strategy is yet. She's still here, but boy, I think when it comes to risk, Jay, there's three attitudes we take. First, we can be like Captain Kirk and be a risk taker. And that's the worst thing you can be. I mean, luckily with Hollywood, he was able to go where no man went before, but in the real world, he'd have gotten killed with these 1,000-to-1 odds every time. The people who think they can never get beat and that they're just risk takers, you can take that attitude. That's not the attitude I take. However, the antithesis of that is the risk avoider, like Dr. McCoy. Jim, are you crazy? You can't go down there. But if you're going down there, I'm going with you. Boy, that dates me, doesn't it? But Dr. McCoy would never make any money because he's scared to try anything. Probably the best investor on the enterprise would be Mr. Spock, where he says, you know what, let's just do what's logical. And I think a risk manager. You don't want to be a risk avoider. You don't want to be a risk taker. You become a risk manager. In real estate, we could make a very simple analogy or a metaphor. You say, you know what? I'm not going to buy a house ever. Why? Well, it might burn down. The pipe might leak. I might have repairs. The earthquake might, have it fall in. So I'm not going to buy a house. Another person says, well, I'm going to buy a house. They say, you're going to buy insurance? Oh, no, that's not going to happen. I don't need to buy insurance. That's silly. You pay all this money for something that's never going to happen, But the wise person says, look, I'm going to be smart about this. I'm going to buy a home. And yeah, it can start on fire. And yeah, it can have the roof cave in. But you know what? I'll buy some insurance. I'll spend a little money and I'll live happily. And I think that's the, why be scared of risk? You get in a car, you take a risk. You get in a plane, you take a risk. And no risk, no reward. But let's not take risk. Let's manage it. And that's the fourth pillar of investing. That's risk management. That's where the money's made as investors, is managing risk.
Indeed, agreed 100%. Now, when there was another question, because when it comes to managing risk, that means you've got to have access to information. You got to have data, information. I call it the DIP process. You take it from data to information, and you got to interpret it properly. And if you don't do those steps, you are absolutely in trouble.
Yep.
So with that being said, when Julio actually asked a question, he says, when evaluating stocks or equities, what are some of the fundamentals you are using to determine things like stock price, P/E, cash earnings, sector growth, or all of the above? He's just like going for it.
No problem. That's actually a really good question, because you need to know those answers and be able to move forward with confidence. So it's a very good question. So I everything I do, it was interesting when Robert Kiyosaki asked me to write a book on this topic. I thought, well, what do I know? And it really forced me to look at what my mentors had taught me, to look at what the most successful investors do, the mistakes I'd made, the successes I'd had. How do I do that? So there's four things that we do, and we'll keep it pretty broad for a discussion of this nature. But I call them my four pillars of investing. And these four pillars, everything a person does in almost any type of investing falls under these four. So we'll do two at a time. The first two are what you said, Jay, about gathering information. And we gather first information about the strength of the entity I'm going to invest in, whether it's a real estate project, a business, like in the case of a stock. And we call this the fundamentals. We call this, as basketball players, we work on our fundamentals. And so there's just certain things that have to be right. If you're a basketball player and you can't dribble, pass, and shoot, you're not a true triple threat. You have to be able to dribble, pass, and shoot. And if you can't do that, we're not going to put you on the team. You've got to be able to do those three. So in stocks, I'm going to look at fundamentals. Certainly, I'm going to look at a price-earnings ratio. Certainly, I'm going to look at the growth. Certainly, I'm going to look at how strong. But all that comes out is the same as anything else. It's how to read a financial statement. Are they earning money or losing money? Do they have debt or equity? Or what's their debt to equity ratio? I'm going to look at those things just like a person learning to play cash flow. It's not that difficult when you spend a little time on it. So that's the first thing. But the second one, Jay, is trends. The idea of charts. This is supply and demand. Certainly, oil prices are being speculated on right now. And the supply and demand has been really changed, both by consumption, but also by speculators.
Mhm.
And so we need to understand trends. I've heard Kenny McElroy, who's one of the most successful real estate investors I know. I've heard him say it a million times. My business is a trending business. He needs to look at different types of trends to make sure he's moving in the right place and going in the right area. So those are the first two pillars. Fundamental analysis is the strength of whatever we're looking at, the entity, the business, the real estate project. Technical analysis is the trend of supply and demand. And as we get those two together, we develop an opinion. And now it's time for us to take a position and do some things. And this is where stock investing is really fun, because you're so agile. You can do so many things. I need to take a position. I need to decide, what am I going to do with this information? Am I going to buy some stock? Am I going to short some stock, make money on the downside? Am I going to sell some options for cash flow, which is my favorite thing to do? And then finally, the fourth pillar is risk management. I'm going to take the attitude that a 401k never takes. I'm going to take the attitude that everything's going to change the moment I click that button. That the moment I click that button, some catalyst will come in and change everything. How am I going to deal with that? Do I have insurance? In other words, if you buy the house, assume it's going to start on fire tomorrow. Well, I'm going to get I'm going to get insurance. Isn't that wise, though? It's not pessimistic.
Right.
I wouldn't buy the house if I thought it was going to start on fire, but I always do my just in case.
Well, here's the thing. I remember when I closed on my first commercial asset, and I'm just like, okay, like within, I think it was 7 days, a flood. It never floods.
Murphy's Law.
I'm like, what? Are you kidding me? But again, yeah, having, disciplined insurance, all that other stuff, it's just funny when you say that and you go, yeah, I remember when that actually happened. The one time it does happen is when you wish you had it. And if you didn't, you're in trouble.
People who get in trouble in paper assets had no hedge and no exit strategy. If you have a hedge and you have an exit strategy, it's very difficult to blow up your account and lose a lot of money and get hurt. And so those are the four pillars: fundamental analysis, technicals, fancy names, cash flow, and then risk management. And you'll find that studying that risk management makes me breathe easy, because every time I go into an investment or a trade, I already know how I'm going to get out of it before I get in. And so, like with oil, right now I'm really interested in trading oil. And if I take a position in oil, it doesn't work out, I already know what my exit strategy will be. I already know what my max exposure will be. And that gives a person the confidence to move forward in investments and give yourselves a chance to win.
Yeah, I like that, because you got to put yourself in a position to win, or at least have a shot at winning. You can't sit on the sidelines forever, which I absolutely understand. Now, Susan actually asked a question that I think is appropriate at this particular moment. She's simply asking, says, besides the idea of not risking what you need to eat or live on, how would you suggest a raw newbie, I love the term, a raw newbie, get started in buying stocks? I mean, she says she loves the idea of buying long-term dividend-paying stocks, but when you can maybe afford a single share of Apple, the dividend isn't going to cover the postage on the check.
Well, there's some fun things we can do. People talk about the options market and they say, oh, well, options are risky and they're only for pros and this, that. If you have a smaller amount of money and it's disposable income, it's off the top extra like she's talking about. Well, let me I can just bring up a chart here on my computer while we're talking that might be fun. If I bring up the stock you mentioned, Apple, right now, it's at about 100 and, well, let me go back into a daily chart so we'll get it even closer. It's had a stock split, so it's sitting at $114 right now, 114.48. But if I were to bring up an options chain where I wanted to buy the right to buy the stock right here, and I went out to April, I could get an option on that stock for $6, and looks like they're asking $7 for it. So I could go out and control, if I want to spend $700, I can control, $10,000 worth of stock for about $700. with an option. And so if you were talking about disposable income, we wouldn't want to throw all our money in one single option because they expire. But there are things you can do to scale in, Jay, and to do some things that are relatively easy to do. We even have mini options that people can buy and get their feet wet just starting out. I also would say this to someone who's brand new: learn before you earn. This is great counsel. The first trade I ever made was a short. It was on the Panera Bread Company. They were in some trouble. And I followed what my mentor told me to do. Now, I was blessed. I had a lot of money to start with. If I'd wanted to go big, I could have. And so it took a little discipline not to do this. But, I decided to short 10 shares. And back then, of course, the stock today is wonderfully successful. But back then, it was about $16 a share, Jay. So I shorted the stock, which is an exposure of about $160 immediately. It can go up from there. And it fell about 10%, fell about $1.60. And so I made $16 on my trade. The commission to get in and out was about $20 total. So I lost $4. I spent $20 in fees to make $16. And the moral of that story is simply that my first trades were not to make money. We get so obsessed with making the money and the earning part that we forget that what I was doing was the learning part. Now, had I scaled up, I could have put $50,000 in that easily, made $5,000 for the same $20 commission. And so part of me was like, why didn't I just go for it? Why didn't I just, go for like 50,000 worth? Right. Well, that's not what I was trying to do. So my advice to the newbie is, let's make our first few trades to learn rather than make our first few trades to earn. And let's really separate education from advice in this conversation. Andy, what should I buy? Should I buy some Apple? I get that all the time. What should I buy? Almost no one ever asks me, what should I study? People always ask, Andy, what are you buying right now? I'm buying oil right now. But you know what? I have exit. I have hedge. I understand options. And so if a person hears, well, Andy's buying oil, I'm going to buy it too, and oil goes down another $20, they're going to lose where I'm not going to lose because I have hedges. So copying what Andy does, not wise. But what people never ask is, Andy, what are you studying right now? What are you trying to learn right now?
So, well, being a fast learner, and as we're getting close to the end here, Andy?
Yes.
What are you studying right now? What are you trying to learn right now?
Several things. In my business, I'm studying leadership right now. I'm reading a book by Phil Jackson called 11 Rings. So in my business, I'm studying leadership. As a stock investor, I'm studying a couple of things. I'm studying the 4 pillars, continually studying sovereign fundamental analysis. That was Michelle's question. What are the big economic factors out there? I'm always studying those. And then I'm also really studying risk management right now with my mentors to get better at creating positions that have a huge upside, but very, very, very little downside. And people would be blown away. I could tell you this. They would be blown away if I showed them what my risk graphs look like with the upside potential that's there and the minimal downside that's there. They'd shake their head and they'd say, Jay, this can't be real. And yet it's what Warren Buffett and George Soros do every single day.
Yep. Completely understood. So with that being said, if someone wanted to, I'm sure at this point, they're just like, mind is blown. They realize that there's a lot of information, additional education, definitely, that you have available beyond just the book. Maybe they have a 401k. Maybe they're ready to get started in stocks. I've got to be honest. I think people probably feel this way when I'm talking from time to time. They go, ooh, maybe I can do real estate. Right now, it's been at least 8-9 years since I've had this thought in my head, but I'm like, maybe I can do stocks. And so it's interesting. So I know if I'm feeling that, others want to know, how do we find out more about what you're up to? How do we, track you down? What is it that we can do to enter your world more closely?
Well, there's always my website, andytanner.com. There's lots of information there. I do blogs and video blogs and stuff like that, and all that stuff is free. If a person has a 401k, I'd urge them to get a copy of 401 Chaos, Jay. I sell it on Amazon for $16 or whatever it is, but this is such an important book that if people don't mind a digital copy, the physical books cost money to print and ship and all that, so I charge for those. But if people want a free copy, they can go to 401chaos.com. They can go to that website and download a free copy and begin to get educated about some of these risks, for free. I think it's important people know the difference between a systemic and a non-systemic risk, some of that stuff. And then we have our educational programs that at some point, if people feel, I want to get serious about this, well, then they can get some more formal training. But, to each his own. I think it's wise to scale into everything, to not jump, craziness into every, learn a little bit about real estate, see how it will fit you, learn a little bit about stocks, see how it fit you. I've met so many real estate investors who never imagined that they would be real estate investors until they learned about it.
Oh, man.
You know what I mean? They just said, I'd have never been able to do that, or that's for Donald Trump, or all that. And, 1031 exchanges, what's all this, scope of work? What are all these critical documents I got to sign? What's escrow? And yet once they learned it, they didn't realize. And I really know the same's true for people in their stock investing. The problem is people that make judgments about real estate before having learned it do themselves a disservice. Well, that's true for commodities. That's true for business, and that's true for paper as well. Learn it, and you may just discover a new income stream, and what a blessing that would be to you and your family. So yeah, drop by my website, and we can, give people whatever they need to learn and get started.
Excellent. Now, as we're ending up here, one final question, if you will. There's probably one or two people who are right now thinking about, for the first time in their life, putting on their superhero tights, finding their cape. They want to go out there and become that entrepreneur, begin to build their cash flow. What's your advice to him or her?
Well, I think it goes back to what you said, Jay, is to internalize your why. That's what the Lannons often teach. There's going to be dragons to slay. If a person's just out there to make money for the sake of making money, I don't know how much power, money in and of itself has, but to reflect about what you truly want, and often money is required to get that. But I think that'd be the first step for someone that wants to be an entrepreneur, someone that wants to be an investor. You got to know why you're doing this. And because there's dragons to slay and there's mistakes to be made, and it's not a painless process, frankly. If a person's looking for a straight line to success, that hasn't been the experience of me watching my mentors, and it certainly hasn't been my road. So I think you got to know why you want to do this. And once you tap that will give you the fuel and the energy to do what you need to do, so you can learn what you need to learn, so you can have what you want to have.
Indeed. I agree 100%. Sir, thank you for investing your time here with the Cashflow Diary audience, and we do hope to be able to produce some dividends and returns for you in the not-too-distant future. All right, ladies and gentlemen, guess what? You know what time it is. It's time for you to move at the speed of instruction. Here's what that means today. It means you've been inspired because I've been inspired, and that means take action. That means 401 Chaos, probably something you should pick up. Stock Market Cash Flow, definitely a book worth reading. Understanding how understanding how specifically paper assets and the concepts, the understandings of fundamental and technical analysis. Guess what, guys? It applies to real estate as well. Here's the point. Now is a great time for you to invest, to learn them so that you can eventually earn. As I've said before, and I say again, you do your first deals for experience, not profit, and then later you get to profit from your experience. It's been fun talking to you. I look forward to talking to you soon. Until next time.